When we think of the markets in the United States, we see it as one of the most democratic parts of the capital system, because any investor, whether you have $100 or whether you have $1,000 or $10,000, you have the opportunity to go in and invest in companies that are growing and expanding the economy. And that, if you look at it, over 50%, well over 50% of Americans today are invested in the equities markets in some way or another. That can be directly, or that can be through a mutual fund or through a 401k or a pension fund. So they all have involvement in the stock market. But at the same time, there aren't as many companies that are available to them to invest in if they stay private longer. And when we look at the trends, we are seeing more and more companies choosing to stay private longer. And in that particular case, then you really only have a very small subsection of the American population that get to invest in those companies and get to enjoy their growth. So our big challenge is to make the markets as accessible and as inviting as possible for these companies to choose to go public earlier in their life cycle, and make it so that more people get to invest in these great growth companies. One of the tenets of Nasdaq, even when we started back in 1971, was that you want to make the markets accessible to companies while they're growing into profitability. So as opposed to our competitor down the street at the time, we allowed companies to go public before they were profitable. There's an enormous amount of investable assets out there. Companies are looking for growth. They're looking for a way for them to save for their retirement, save for their education, and grow their wealth over time. And if there are good companies that are ready to go public and ready to come out, they should absolutely tap the public markets. I also think that if anything, we could see more and more companies into the public markets and see that there's an enormous amount of investable capital ready to invest in them.